Good morning. This is Professor Randy Minton from Thomas University, and today what I want to do is go over exercise 3-27 in your book, and I've gone ahead and created for you the unadjusted trial balance debit and credit and the adjusted trial balance debit and credit. And the adjustments themselves I have already made for you so that you can kind of follow along. I'm going to walk through them one by one so you can see what I've done and why I've done it. So without further ado, let's get started. When we look at the unadjusted trial balance, and basically what this problem is telling us is to take a look at the unadjusted trial balance and the adjusted trial balance, and for any differences that exist, we need to make adjustments. So I'm going to first of all point out to you that I've already made a change here that did not exist prior. When we first looked at this account, instead of in the adjusted trial balance having 190,000 that matches this number, we actually had 177,000. And I'll explain why I went ahead and made that change, but essentially what we had to do was either go ahead and make that change or make two adjustments to a single account, which I did not want to do. Okay, so basically we're going to look from the unadjusted trial balance to the adjusted trial balance and see if there were any changes. And then evaluate those changes and make sure that we agree with the changes as made. So the first one, of course, is cash. And if I look in the debit column of cash on the unadjusted trial balance and the debit column in the adjusted trial balance, I see that there's no change. There being no change, then that means that I don't need to do anything in that account. There's no adjustment to be made. If I look at accounts receivable next, it started out at 18,250, and if I looked at the adjusted trial balance, it was 23,250, and that difference is $5,000. And in order to get from here to here, we need a positive $5,000. Well, that means that the accounts receivable went up by $5,000, and most likely the way that it went up was to have a $5,000 entry down here in laundry revenue, because accounts receivable typically is a reflection of the sale of goods on account. Okay, sale of goods or services. In this case, it would be services. Okay, so that would take care of that that adjustment, and we would have a debit then to accounts receivable to make it go up, and a credit to laundry revenue, which also makes it go up. Why? Because accounts receivable is an asset, goes up on the debit side, and revenue is a revenue, and it goes up, or stockholders equity component, it goes up on the right hand side or the credit side. Okay, looking at the next account, we started out with laundry supplies of $3,750, and we ended up with $750. So since that account went down, and since laundry supplies is an asset, in order for it to go down, it must have been credited in the amount of $3,000. That being the case, then we had to have a debit somewhere for $3,000, and where's the logical place for it to go? Well, laundry supplies expense, because if it's going down, then the chances are pretty good that what's happened is that we have incurred some expense, or we've actually transferred from the asset those supplies that are now going to the used up portion, which would be the expense. So we'd have a debit to depreciation expense, or excuse me, to depreciation expense, to laundry supplies expense for $3,000, and a credit to laundry supplies for $3,000. Again, laundry supplies is an asset, so if it's coming down, it has to be credited. Laundry supplies expense is an expense, and it is it's making the revenue or stockholders' equity side of your equation go down, and therefore it must be debited. Why? Because stockholders' equity goes up on the right-hand side, and this is representing a reduction in stockholders' equity. The next account would be very similar to that one because it's prepaid insurance, and what happens is we prepay insurance over some period of time, several months maybe, and as we go through a period of months, we take those the amount of insurance that we've actually used up and is no longer prepaid for us out of the account and put it into an expense. So in this case, in order to make it come from 5,200 to 1,600, we needed a credit adjustment of 3,600. So the debit side would be to the insurance expense side because it represents insurance that we have now used. So debit insurance expense, why? Again, because it's a stockholders' equity item and expenses make stockholders' equity go down. And prepaid insurance is an asset. In order for it to go down, it must be credited. Now, the next one, again, I told you at the start that we started out with laundry equipment of $190,000, and in the book, they had $177,000 over here. Well, what they did was they took the depreciation expense, that is the accumulated depreciation side of the entry, and they reduced laundry equipment instead of putting it to accumulated depreciation, which is the proper way to do it. That's a no-no. Okay, so we do not do that. So what I had to do was I had to take and make an entry off to the side, basically, to take it back into laundry equipment and credit it to the accumulated depreciation side to make that number work correctly. And if you notice down here, we had nothing over here, but we had 13,000 over here. So the depreciation expense, and that's what, by the way, informed me that we didn't sell that piece of equipment or we didn't dispose of it. It was actually depreciation that is representing that $13,000. So debit the expense, depreciation expense, because stockholders' equity is declining, and we are crediting the account, which is a contra asset, accumulated depreciation laundry equipment, for $13,000 as well. Now, since we net out laundry equipment and the accumulated depreciation laundry equipment, since those two numbers eventually will be netted out, you're really in effect making the asset drop. I hope that makes sense to you. But we don't go strictly through the asset to make that happen. One reason is that we want to preserve the cost basis, which is what we've done here. And the second reason is that when we calculate gains and losses, when we sell equipment, we need to keep those separated so that we can actually properly calculate the gain and the loss. And when we get into a little later chapter, probably 7 or 8, you'll see what I'm talking about there in more detail. So that takes care of Eva's Laundry Exercise 327. I'll have another one that will take the same spreadsheet, and that's why I've added some of these columns over here to show you how that goes into the income statement, trial balance, and ultimately the post-closing trial balance. So thank you very much. Appreciate your attention, and we will go to the next video here shortly.